this lesson. And being the beginners 1 week training online, I'm going to take you through this training. And as I've shared in the previous video, in the previous session, that in this training, I will cover a number of things. And I want us to go straight to the introduction to Forex. Welcome here. This is Treasure Key Forex. And my name is Master Trader. Now, this being 1 week training, Forex trading for beginners, happening online 2 hours a day for 5 days. And we are covering the basics to Forex trading, that is introduction to Forex trading. For anyone who is this being 1 week training, Forex trading for beginners, looking to get started trading Forex, this course is ideal for you. And remember, what I'm giving you in this 1 week is information and skill set. Okay. And again, I'll give you the remaining 3 weeks of the month. I'll give you the psychology mentorship or the psychological mentorship. I'm calling it the live account trading challenge. So I'll be going with you, doing technical analysis together with you, showing you entry points, and then leaving you to make the decision. And you look for the opportunities and enter, place your stop loss, and take your profits responsibly. And then we trade and work this challenge together. So I'll be telling you, here is an opportunity. And where I tell you there's an opportunity, I also take the opportunity. So at the end of the day, we compare the notes and see, did you enter the trade? Why did you enter? Why did you enter? And then we see the results. Why did you cancel the trade? Why didn't you wait till the end? What happened? And that way I'll be helping you develop the traders, the successful traders mindset. And therefore, getting started, there are a few questions that we want to look into, because we are starting into Forex trading. The first question, looking to get started trading Forex. This course is ideal for you. And remember, what I'm giving you in this 1 week is information and skill set. Okay. And again, I'll give you the remaining thing we want to ask ourselves is, what is Forex trading? And in this slide, I'll present just a few questions. And number one is, what is Forex trading? Then we'll go into what is traded in Forex markets. And then we'll ask, who are the key players in Forex? And then we ask, when is the best time to trade Forex? Then basically, we look at some reasons why you should trade Forex. And then I will take you to how to trade Forex. And here we look into some terminologies. This will get us started to the next session. But for this first session, I'm going to take you through what is Forex trading, what is traded in Forex markets, who are the key players in Forex, when is the best time to trade Forex, why trade Forex, and then basically how to trade Forex. Okay, now why are these questions very important? We are laying the foundations. If you don't know what it is, you don't have business starting with it. Now, if you don't know what happens in there, what is traded, what are you going to buy or to sell in there, then my friend, you might spend a lot of time not knowing or not getting progress to anywhere. Then you need to know who is selling, who is buying, who is influencing what. Right? Then you need to know, like, when is the best time to be in the market and when is the best time to leave the market. You remember that song, The Gambler? You got to know when to hold on, you got to know when to count. Never count your money when you're sitting on the table. No, 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 no. When the deal is done. You know? Yeah, you need to know, like, when is the best time to get in, when is the best time to get out, when is the best time to do this thing. Okay? So why trade Forex? Now, with that being said, my friends, I want to take us to, let me take you to my whiteboard so that you may get to see what I'm talking about. And you are going to love this. I definitely know that you're going to love this. This is a short course, yes, that I'm going to deliver to you. And it's going to give you definitely a skill set that you can live with the rest of your life. And you hear some people asking me, okay, if you're making it in life in trading Forex, why are you looking for us? Why are you charging? Okay, I don't know. Maybe I don't know. But if you're looking for somewhere to trade, my friend, is that place. I hope you understand me. So I want to go and answer the first question, which is, what is Forex? Let me start here. What is Forex? What is Forex? And this is what I will tell you. What is Forex? I will tell you that Forex, the word Forex here, is a short term for these two words called foreign. Or you forgive my handwriting. Foreign and exchange. Are we together? So we are looking for a foreign, then we can exchange. Okay, so we are looking for something to exchange, and it has to be foreign. All right, and it is basically a global market. Global market. Forex market is a global market. Global market. You know what happens in any market. In any market, we buy and do what? Buy or sell. In any market, you buy or you sell. That is the whole business of any market. So in this foreign exchange market, which is global, we are looking to buy or sell global or international currencies. So it's where currencies are sold. Okay, where currencies are sold. And since I told you it's the world's largest market, that we have foreign exchange. Okay, I'll come to this later. I want you to know that it is the largest market, largest global market. It's the largest with about 7 trillion, 7 trillion, the 7 trillion, and it is not Kenyan shillings or Uganda shillings or Tanzanian shillings. It is 7 trillion US dollars. So this is a lot of money being traded daily. So this means it's a very liquid market. It's a market whereby you cannot miss money. It's a liquid market. Money is in abundance. It's a financial market where money is in abundance. So all you need to do is to identify a sell opportunity or a buy opportunity. Then what are you buying and selling? That takes me to the next question. What is traded? What is traded? What is traded? That takes me to the next question. What is traded in Forex markets? If it is the largest market, that is open 24 hours, 5 days a week, what is traded in here? I already told you what is traded in here. And I told you that what is traded in Forex market, is currencies, world currencies. Okay, world currencies. What is a currency? A currency is a denomination, okay, of monetary value. This is how in English. Monetary value of a country. Are we together? So a currency represents the monetary value of a country. For example, in America, we have, that is United States, they use dollar. Okay, so this dollar have a symbol which we call USD, where this represents the country or the economy, where the US represents the economy and D represents the currency. You also may have, this is now the currency, this is the economy of the country. You may also have something like GBP. So this is Great Britain, pound, Great Britain pound, GBP. We have the Japanese yen, JPY. So this is the country Japanese and this is the yen, the currency. Are we together? Of course, we have the Kenyan shilling, which is noted with KS. We have the Ugandan shilling, which is UG, Uganda, and shilling. Okay, so we have the Tanzanian shillings, which is TZS, which is Tanzania and shilling, Uganda and shilling, Kenya and shilling. Do you understand? So what is traded in Forex market? We already say that Forex market is the world's largest market where currencies are traded, where the world's currencies are traded. Now look here, my friends, when we are trading currencies, they are traded in pairs. So currencies are traded in pairs. I hope you are with me. Currencies are traded in pairs. They are traded in pairs. So what is a pair? A pair is a combination of two currencies. Are we together? Currencies. I'll use the Ugandan and the Kenyan shillings as an example. We have the Kenya shillings and Uganda shillings. Can you see that? Now this is a pair. In this pair, we have two parts. Okay, I want to believe you're with me. It has two parts. We have the first economy, which is Kenyan economy, against another economy called Uganda shillings. Are we together? Uganda shillings. Now, here, these two pairs, one currency, or in this pair, one currency represents the value for the other. So this one becomes the unit, and this one becomes the value. Are we together? So this becomes the base. I'll use an example so that you may understand. This is a base currency, and this is called the quote currency. So this is now what we are buying and selling, and this is the value, the monetary value. Okay, so we will say 1 Kenya shillings is how many Uganda shillings? 30 Uganda shillings. Are we together? So 1 Kenya shillings is worth 30 Uganda shillings. Now this is how it goes. If you go to to buy at the market to buy tomatoes, they tell you, you ask them how much is the potato. They tell you 3 tomatoes is 30 Kenya shillings. In other words, they are telling you that 1 tomato is how much? Is 3 shillings. So this is the put, the base, and this is the quote. So this is the unit, and this is the value, the price. Are we together? Are we together? Later, I will come to when we'll be talking about the fundamentals, maybe in the professional course. I will be explaining how the news in this economy can affect the price of this, or the economic news on this, how they can affect this. But for now, I want you to understand that we buy and sell currencies in pairs. Okay? When you are buying one, you are definitely selling the other. Are you together? That's why when you go to the banks, you see they have buy and sell. Now, the difference between these two is called spread. Spread is the cost of doing business in Forex. Hope you understand this one. If you go to the bank and see on the charts, they have the buy price, which is normally high, let's say 110. And maybe we also have the sell, which is, let's say, 109. So the spread here is 1. Are you together? So this is the cost of doing business in Forex markets. I want to believe that you're still with me in that to that point, because I want to go to the next question, which is who are the key players? Who are the key players in the market? Who are the key players? Who are key players in the Forex? Key players. Who are the most important or dominant players in the market? I will tell you that we have quite a number of them. Okay, we have quite a number of them. And number one is the central banks. Okay, central banks. Central banks are key. Central banks. Okay, these ones are the ones that control the currencies of any economy. Central banks. Okay, central banks. Number two, we have some other group of people called commercial banks. Commercial banks are like these other banks that we deposit our money to, but these banks, they deposit with the central banks. Okay, so commercial banks are such as Equity, such as Family Bank, Barclays Bank, Bank of India. Bank of India is a central bank, by the way. Right? Yes, such banks are called commercial banks. Then you have big corporations. Yeah, these are corporations such as insurance companies, big corporations. Yeah, some communication corporations, they invest in Forex. Okay, and they not only invest, but they also make some news that affect this economy or this market. And then we have the hedge funds. These are people who have come together, put their funds together, and they give people to trade for them. They are called the hedge funds. Okay, like NHIF, NSSF. Yeah, then we have the retail traders, of course. Retail traders. Of course, you have retail traders. Okay, we have these people called retail traders. You get me? And then we have retail traders is some people like you and me, people with small capitals. And by the way, for information, before we came to the retail traders, some time back, it was business between these and these ones. Then we broke it down. We came out to the commercial or the big corporations. Then we came to the hedge funds, circles, cooperatives they do here. And then now we broke it down out to the retail traders, so that you with your 10,000 Kenya shillings, with your $100, with your $1,000, you can trade the market. Okay. And then now we have some other people here, very important, called Forex brokers. Forex brokers are very, very important. Forex brokers. Okay. These are also very important players. And as we continue, you will learn the place of each one of these in the market, the people that you're trading with. Okay. The big corporations, these are called the big boys, and the commercial banks, these are the big boys. Okay, and some of these, they make the news, like the Central Bank of Kenya. They are not from Kenya. We are not yet there. Bank of England, when we call this guy, what is his name? Paul. Yes, when he comes to make some news, everybody is looking to what he's going to state about this economy, and then we are waiting for the retail traders now to react onto that. Then the big boys are waiting for those news to make decisions and know whether they are going to buy or going to sell. All right. Now, sometimes these big corporations, they make news, and this news will affect maybe the Kenyan shillings. Now, the central bank comes and plays with tariffs, with interest rates, and then they balance how the economy or how the currency of that particular economy behaves. So there's a lot of dynamics that goes into all these players. But what I want you to understand is here are two very important people that for now we cannot assume. That is the retail trader and the Forex broker. You need a good Forex broker. Remember, talking about the spread. Spread is taken by the broker. It is the amount you pay to the broker to allow you access the market. Okay, so there are brokers that charge too high, and there are brokers that charge fair. Now, some brokers charge in terms of spread. Okay, this spread is per each lot, per lot that you are trading, Okay, and there are other brokers that charge you for commissions, on commissions. So for every lot size that you trade, they charge you a certain commission. So when they charge you per spread, it's like for every trade that you enter, it starts with a negative, with a minus. A few pips are taken away. We'll talk about pips. A few pips are taken away from you. Okay, and then you understand that when it comes to commissions, they don't take as in per trade. You get there, and there is where your entry price is. The difference is that the commissions are good because each trade does not count to a loss. And again, the spread, when you calculate it, depending with the profits that you're making, especially when you're more profitable, it is not something that you feel more of a feature. So it's not something again that you need to fear. But you want a broker who is fair, who does not manipulate this. Okay, you want a standard broker. Okay, and now let's continue and talk about the next question, which is when is the best time to trade. The next question is when is the best time to trade. Let's see, best time to trade. You already know now what Forex market is. You know that it runs 24 hours, 5 days a week. Best time to trade, and you know that we trade currencies, BTT to trade. Okay, you already know that we trade currencies, and you know the players. Okay, now we want to know when is the best time to trade. I want to repeat this, that the market is open 24 hours a day. The market, Forex market, is open 24 hours a week. That means at midnight the market is open. You can wake up and start looking for opportunities. In the morning the market is open. But is it to say that every time is a good time to trade? No. The answer is no. A big no. Yes, the dollar market might be open 24 hours, but right now we don't have buyers and sellers. So someone who is selling tea in the dollar market, this is a bad time. Okay, because right now the people that you have there is the lorries and the lorry drivers who are offloading. So in the morning around maybe 4, people will start coming early to take stock to go and sell in the kiosk and whatever. So it's not every time that is the best time to trade. So every time you are trading, you want to trade where and when we have volatility. What is volatility? Volatility basically means that we have volumes. If it's tomatoes, we have a lot of volumes being bought and being sold. That means a lot of cash is transacting. Are we together, people of God? So volatility is one thing that we look for in the markets. We are looking for volatility. So there are times that we have volatilities. Okay, there are times that we have volatilities. One of the best times that we can talk about, especially at this time, is when we have high liquidity. Okay, or when you have high liquidity. I'll give you sessions, because the market trades in sessions. Liquidity. We have sessions, and we have 3 main sessions. Let me list them here. 3 main sessions, and I want to believe you are following me. 3 main sessions. Okay, session number 1 is the Asian. I'll say Tokyo session. This is Japan. Tokyo, which is Asian, and this one I'll use the East African time. Let me say that we use the East African time. The best time to trade Forex, the same. So we use the East African time. This market is open at midnight and runs all the way to 8 a.m. Are you together? Why? This is the time that the Asian market opens. Tokyo is where the Japan's central bank is, and therefore it is used to mark the Asian time. So when they open at 8 a.m. the Japanese time. But in Kenya, it is midnight. Are we together? Kenya is midnight. Okay. Then we have the other session that is very important, and that is now in London. In London denotes the European session. I don't know why it is not African. We can say African because it's just a difference of few hours. Okay. And this is 10 a.m. to 6 p.m. East African time, remember. Okay. So here again is another session that the market is open. And then we have another session, which is New York. New York is representing the American economy. Okay, American economy. The Canadian economy is represented here. American economy, the Mexican economy is represented here. And they open the market at 3 p.m. That is 3 p.m. East African time to 11 p.m. East African time. Okay, so this is about 8 hours. 8 hours of official hours. 8 hours official working hours in each of these economies. Now, in this session here is when we have the highest volatilities in these 2. During the night, we don't have much volatilities. Okay, so high liquidity is found in the New York session and the London session. So let me take those 2 and draw something here. I will draw purple for the London. Okay, London. Okay, remember I'm using East African time. That is say 10 a.m. 10. Okay, and here is 6 p.m. 6 p.m. and this is 10 a.m. East African time. Okay, so this time the market is open. Okay, this time the market is open, and when they open, news are being made that traders are trading, then volumes are moving. Okay, but then on the other side, let me change the color for that. Let me use some yellow. Let me use some yellow for New York. For New York session, they will open at 3 p.m. Okay, this is New York. This is New York now. New York now, they are open. They are making news all the way to 11 This is now 11 p.m. East African time, and this is 3 p.m. East African time. Are we together? So this is when we have the highest of liquidity. This is when volatility is high. Well, volatility simply means we have within a very short time the prices are moving. When the liquidity is low, the market is moving like it. Okay, low volumes. Okay, but when there is volatility, it moves big strides. Okay, so the best time to trade is when we have high liquidity, and that time is denoted here. Okay, when we have this overlap, this is the best overlap. You see this overlap here? This is the best time to trade. Here we have lots of volume. When the London and the New York sessions, they overlap, this is the best time. And this basically is 3 p.m. to 6 p.m. East African time. This is the best time to trade. I hope you get me right. When it comes to days, Mondays are slow, Tuesdays, Wednesdays, then we have Thursdays and Fridays. Okay, let me explain something here. All these days, the market is open, but not every day is profitable, is good, is ideal for trading. Though you can enter the market and get opportunity, but there are some good days. Tuesday, Wednesday, and Thursday, they are very good days. Okay. For Mondays, the markets are opening, so decisions are not yet made. Okay. On Fridays, people are closing their orders because of the weekend gap. So this time we are not looking into so much of opportunities. But this one, yes. The other thing that you need to look into when is the best time to trade is the news. And for beginners, news is not something to play with. So news for now, once our channel will give you a strategy on how to trade the news maybe later. But for now, you don't want to dare news, especially when your account is small. You need to be very, very, very cautious. Are we together? Are we together so far? Are we together so far? If we are together, kindly subscribe, like, and share. Okay. Now the other thing that I want to, the other question that I want to answer before we call this session over is why trade forex? Why? It's the why forex. Why forex? Why would anyone want to trade forex? Why forex? Why forex trading? Why forex? Why forex? Someone tell me why forex? Number one is because of high liquidity. I want to change the color of this and give it. Let me do supply. Number one is liquidity. High liquidity. We have high liquidity. Yes, high liquidity. Oh, we have high liquidity. Kumaanisha we have a lot of money in the market. We have high liquidity. Liquidity simply means we have a lot of money that you can take advantage of. Okay, it is so easy to make profits. It's more profitable. But remember, the more profitable it is, the higher risk it is, the more risky it is, or the more possibilities for you to lose money. Easy to enter or exit trades. It's easy to make money. It's very liquid. And the other thing is that low capital requirement. You need low capital requirement. You can start with $50. Okay. Remember, the higher the capital, the better. The lower the capital, the riskier it is. The higher the capital requirement. This is a requirement level. What are you saying? High. Don't mix us here. So we want to say the high capital, low capital requirement. This is requirement. Okay. You are required to have a low capital requirement. Okay. And the other point is that leverage. I will explain what leverage is. What is leverage? Leverage. This is one of the terms that I will come to learn in the material that I will share on the terminologies that are used in Forex trading. So leverage basically means in your account you have $100. Okay, $100 in your account. If you have $100 in your account, and leverage is actually represented in terms of ratio 1:100. If you have a leverage of 1:100 and you have $100 in your account, it basically means that for each $1 you can control 100 times in the market. So if you have $100 and you use a leverage of 100, it is to mean you can control $10,000 in the market. That is what leverage means. It simply means like it's like credit that is given unto you. For example, if you want to go and buy a car on hire purchase and you deposit, they normally ask for a deposit of, let's say 30% or 40%. Let's say 30%. Okay, this is your margin, right? Then they give you a car worth 1 million. So 70% is leverage. 70% is leverage. Okay, so this is not your money, but they have given you as part of that car. The car is worth 1 million, but you have given them that's like 300,000, and then you are given a car worth million. So 700,000 is leverage. I hope you understand the method. So point number 4, why we should trade forex is flexibility. Number 4, flexibility. Flexibility is a key thing that you want to consider when you're trading forex. Means that you can trade anywhere, anytime, anywhere, anytime in the world, anywhere, anytime. You just need a mobile device, a tablet, a desktop, or a laptop. and connection to the Wi-Fi. Then you need a broker, you need an account, and then access to internet. You are good to go. And the other thing is number 5 is now opportunity. Now let's talk about that. Opportunities. There are lots of opportunities here. Opportunities. Okay. Opportunities. There are lots of opportunities. A lot of opportunities in rising and falling of the market. You know, like in stock markets, you only make money when the prices go up. When the stocks go down, you are not making nothing. But in Forex markets, when the prices are going down, you still make money. And when the prices are going up, you still make money. When the prices are down, you buy. When prices are high, you sell. Are you together? Good. And that basically is what it is all about Forex trading. Those 5 questions are very, very important. Those 5 questions that we asked when we were starting, they are very, very, very important. We are asking these 5 questions, basically asking what is Forex trading. We say Forex trading is the world's largest global market where currencies are traded. Are we together? It has about 7 trillion US dollars traded in one day, meaning it is the world's most liquid market. Number 2, we ask what is traded in Forex markets. We say currencies are traded in Forex markets. And we also trade other commodities such as gold, oil, flour, indices, stocks, and all that. But all these are traded against currencies. So a currency is the key element in the market. And we see that when you're buying one currency, you are selling the other, meaning that one currency is valued against another. And we say we have the quote currency and we have the base currency. The base currency we say is the unit, while the quote currency is the measure of the value of the other one. Are we together? So you buy when the prices are low and you sell when the prices are high. Who are the key players? We say that we have the central banks, we have the commercial banks, we have the big corporations, we have hedge funds, we have retail traders, and we also have the Forex brokers. All these are people that or organizations that are involved in Forex trading. And each one of them has a special role to play in the market, in the Forex market. And therefore, in one way or the other, they might affect your trading. Number 4, we ask, when is the best time to trade? The market is open 24 hours a day, 24 hours a day. That is Monday to Friday. But it is not every day and every time that is ideal for trading. We say the best day to trade is Wednesday, Tuesday, Wednesday, and Thursday. And sometimes Friday in the morning, because that time in the afternoon, people are looking to close out their trades. On Monday, decisions are not made. Corporations are making their week and looking at the forecast of the week, and therefore liquidity is not yet released into the market. So it's a time and a season of consolidation. You want to avoid when you have consolidations, and you want when the market is moving. All right. We also say that the best time to trade is when we have the New York and the London overlap. That is in East African time. That is between 3 p.m. to 6 p.m. Basically, that is the best time to trade. Not to say that you can find opportunities in the morning or you can find opportunities at night, but they are not so much recommendable. You want to trade when we have liquidity or when we have volatility. The other question was, why should we trade Forex markets? We said number 1, flexibility, low cost or low capital requirement. We talked about leverage. We talked about high liquidity, and we also talked about opportunities. Can you imagine of a job or a business that you can do anywhere, anytime in the world? Yes. Can you think of a business that you can start with $100 and you'll be making like 1,000 every day, Monday to Friday, and over time you'll be able to make even more than that? Can you imagine? Think of a business like even Uber. For you to make 3,000 a day, you need like about an investment of about $1 million. Think of a barber shop. It will take you about 100,000 Kenya shillings. Think of a hotel. It will take you about 200,000 Kenya shillings to start. So that will be making about 3,000 per day. Plus all the hassle of waking up early in the morning, sleeping late, all the jargon, all the hassle. But this one, you can do it in your sitting room. You can do it in your bedroom. You can do it even in your lunch break. You can do it at midnight. Can you imagine the freedom? Forex trading is a good way to go. But I recommend that before you start putting your money in, put your money first in education. Learn Forex. Understand Forex. Have the skill set. Then invest in your lifetime. Build the psychology. That means you need to work with a disciple maker, a teacher, a mentor. Work with someone for at least a month or 2 months. Then start looking at your own strategies and start growing now into Forex. Now I'll tell you, every day in Forex is a learning day. Every day in Forex is a humility day. It's a humbling day. You always come humble. Remain humble and forever remain humble. Learn and learn and learn. No matter how successful you are in Forex, the day you stop learning or the day you start thinking that you know it all is when the market gets the opportunity to humble you. So with that being said, friends, I would like to respond to your questions. If you have any question, please drop it on the comment section. Type it up there or just get this number here and write to me directly. All right. The next thing we are looking into is technical analysis. Now,